doing it literally over my shoulder when we do our live streams. Think about what I'm not, and not while I'm doing it, afterwards. These are all the things you're going to record in your journal. You're going to note how little that you need to focus on to find a setup that will yield potential points or pips if you're a Forex trader. Everything that I'm going to be teaching over the medium of the E-mini S&P is absolutely applicable to stocks. It's applicable to Forex. It's applicable to cash markets if you're not in the futures market. I've been wrestling with the idea of how I know a lot of you don't have access to the futures markets, and you like to trade the US 30 instead of the Dow futures, or the US 100 cash market instead of the NASDAQ futures, and the US 500 versus the S&P E-mini. I've thought about how I was going to do that. So I think what will have to happen is I'll have to create a layout. So that way when I'm observing things in ES, and when I interchangeably go back to the NQ chart, so that way you can see and compare and contrast. You'll see also on my chart how I'm plotting and posting the SMT. I've seen a couple of people ask, how do you put that on there? I'll show you. I'll walk you through it that way you can see what it is I'm doing, how I dress my charts up, so that way you can do everything that you see me doing with my charts. You're seeing one template of the 8 monitors that I have. Now, don't think, because I said 8 monitors, there's 8 in front of me, okay? I have supporting monitors to the side of me, but they're not important. The ones that I'm actually working with, they're making the decisions on what it is I'm following, what I'm focusing on, they're right in front of me. And you only need the template I'm going to show you. If you can't have the template where it has the 3 charts on one screen, you can toggle through just by changing the time frame. Don't think that you have to have it exactly like I'm saying. But a lot of you ask for this, so I'm showing you. It is not the secret to it. It's whatever you're comfortable with. If I have 8 screens on my desk in front of me, don't equate that my experience or my success in being able to do this is attributed to because I have 8 monitors. Because I can literally be walking around. I tell you not to trade on your phone, but because I know what I'm looking for, I could trade on my phone. But that's not an invitation for you to say, well, ICT said he can do it, so therefore I am his student. I should be expected to do the same thing. That's not true. I'm not saying that. But I'm saying to combat the idea that you have to have all of this real estate in front of you in terms of monitors. You don't. So don't let that be an impediment to you or a point of contention for, oh, well, I have to have extra things I can't afford. And that's the perfect excuse why I'm going to fail. No. One laptop. When I'm doing all of my video work and I'm recording, I'm using a laptop. When I'm talking to you, well, I'm not talking to you now with a laptop, but if I'm doing live streams, I'm going to be on a laptop, one single laptop. But I have a layout that I'm constantly going to be referring to. And you'll see exactly what I mean by that. Most of all the things that you're worrying about or have worried about when trying to learn from me or watching videos and such, you're going to see how all of that was just needless anxiety. You're trying to make everything applicable to every condition in the marketplace on any given time frame when it's not necessary. Much like it was when I first learned technical analysis, the traditional approach to technical analysis. I wanted to apply everything. Every trade had to refer to commitment of traders. Every trade had to have at least 3 moving averages. It had to have 2 oscillators, because one oscillator might be lying, so I have to confirm it with another oscillator. And if they agreed and there was a divergence there, then and only then the trade was really good, because I had 2 witnesses behind the idea, right? So more isn't better. It's not. And my charts only get bloated when I'm annotating levels for you to observe. And it's going to be very hard for me to do what it is I usually do with price action. And like I'm going to have to force myself to annotate much more on a chart than I normally would. So that way you can see it. So if you're wondering what I mean by that, just basically think about what I'm doing with the chart when I'm recording it and I'm doing the execution. Like I have to force myself to do that. I don't do that when I'm trading. It's usually just a naked chart. I'm looking for price at a specific time to do certain things, and I'm looking for periods where I can, pyramid when it's necessary. So it's going to be a growing thing for me, doing this live with you, so that way I can listen to your feedback and try to be, at least in this part of the feedback, at least try to be a little bit more sensitive than you normally would, because I'm easily offended when I see other people show no consideration for the fact that I'm doing this for free when I don't need to do it at all. So I'm looking for constructive criticism. I may not take your criticism under advisement and even implement it or use it. I won't be rude and snap back at you, but I may use it in the live streams going forward if it's useful. If it's something I know I can accommodate, I'm absolutely willing to do that. But I'm not going to be doing have it your way. Can you pull up gold? Can you pull up crude oil? We're not doing that. Okay. We're focusing primarily on the S&P because you only need one market. And whatever you see me doing this entire year, if you're a euro dollar trader, okay, or you are a dollar dollar CAD trader, whatever the forex market that you trade, it's applicable. Everything runs on this same algorithm. That's what you're going to discover. I wasn't supposed to say that. I said the other day when we're not going to talk about algorithms anymore. The characteristics tend to repeat themselves across major markets. I think that's a nice ambiguous way of saying it without causing any people that don't believe there's an algorithm to get all upset. But technical analysis, when we look at the marketplace and what I'm going to be training you to do, if you're already profitable, some of the things that you'll see me do might resonate with you because you have a lot more experience and you know what you're looking for in terms of price action. You might be bullish when I am expecting higher prices, and you may not see these entry points that I'm going to refer to as price paints. In the beginning, it'll feel like, I don't understand what he's doing that for. But when it's day after day of it doing it, week after week, and then month after month, and you look back over the course of the entire year, you're going to see, wow, yeah, well, I can really see that. I can really see that happening. And there's nothing except for the open, high, low, and close on the chart. The only things I'm putting on there is to highlight what it is that you should see specifically in this specific area, what my attention is focused on, and only in that. So don't look at anything else on the chart outside of whatever I'm referring to, because everything is inside that specific moment in that series of candles in that fractal. And that sounds like a mouthful, but you'll understand exactly what I mean starting on Tuesday. When we start, I'll walk you through a traditional market analysis. What I see from a traditional stance, what every trader would expect to see, and that may or may not align with what I think is going to occur in price. And it doesn't mean I'm going to be right all the time. So don't be tricked into thinking just because you've seen almost 100% accuracy for a day-by-day basis for as long as I've been going that I won't get it wrong. I will. It's absolutely going to happen. And in fact, I'm looking forward to that because I want you to see that it's going to be very infrequent. And that's the benefit. So you're afraid of being wrong. Some of you out there that don't like me think I've been afraid to do that. I've not been afraid to do this. I just don't want to do it prior to now because it's easily copycatted. It's easily parroted for people that don't know me and they're running channels and running services. It's going to be very easy for them to repeat what I'm saying. And if the audience that they have in front of them is not aware of me doing it for free out in front of everyone, and I'm accurate, it's going to make them look accurate. And that's the whole reason why I didn't want to do it. But this year, I'll give you my year. I don't care. Okay, I can give you a year and it still won't take any skin off my back. And it will hopefully help a lot of you in the course of doing it. So by traditional analysis or market analysis, um, that really entails a macro analysis, looking at the higher time frame, monthly, weekly, daily. What's the quarterly shift that we're presently in or about to transition out of? Um, Seasonal tendencies, very long-term macro perspectives, where the market is really likely to be going on a higher time frame. That doesn't really impact a lot of the day trades that I do because I can be buying and selling in the same day on any given day. I could literally flip a quarter and say, okay, if it's heads, I can only be a buyer today, and then I could just make money doing buying in a down day. And these are all things I've done over the years to teach myself that yes, there's an importance behind narrative and bias, but I can trade without a bias. You will learn how to do that this year. You do not need to be painted into this box that sometimes it makes you feel like when you're watching my videos, like this is the only way you can do it. No, there's lots of ways. There's lots of ways. Price is constantly moving, and you're going to see the plethora of types of setups that are available to you. And just because I'm not taking them doesn't mean that they're not valid. I'm not worrying about that one. I'm looking for something else. I'm looking for a different cherry to pick, if you will. You might like a plum, okay? You might like an apple. You might like an orange, okay? There's a different variety out there, and I'll show you how to bring your own personality to it and not be forced into any particular mold. So that way it feels more organic to you. It feels like it's your method, your model. And while I helped you, you've adopted it as your own. And it's really important to have that as a trader because copycat trading doesn't work unless you're doing signals, and you're allowing your trades to be copied, which is what I don't do. There's no real benefit to that if you're trying to learn how to trade. Now, if you have no interest in becoming a trader, but you want to be profitable and you found someone that's got a hot hand and it makes their signals available, then there's nothing wrong with that either. But I don't think anyone should be following someone's signals if your interest is in trying to learn how to do this, because the only thing you're going to do is develop codependency. And I think you'll see this year, I'm not going to develop or cultivate codependency. I'm teaching you independence. I want you all to be able to say at the end of the year, because of what you've taught me, because we walked through the charts live, a lot of the questions and misunderstandings and fear has been countered. And now I feel independent apart from you. And I feel like I can go forward without you. That's exactly what I'm aiming for. I'm not aiming for you got to keep coming to my channel for ad revenue. That's not what I'm doing. I'm showing you how you don't ever need to come back to my channel after this year. How's that work for you? How's that a marketing ploy for you? That's exactly what I want. I want you to be independent, and you should want that. Every trader should want that. Every trader should want that of the outcome and the experience with a mentor. I could form this into something where it makes you feel like you have to be with me forever, and I could fleece you for life, and you would be gladly paying me if I was going to do that. I don't want that. I want you to do this independent. You don't need to buy anybody else's stuff. You don't even need to buy my books. Okay? You won't need to do that. It's not an upsell. I'm not building the audience that way. I have more people buying my book. I'm going to prove that you won't even need to do that at the end of this year, because you'll know exactly what to do. So there's no risk here. There's no risk. None. You have zero risk. You have all upside. And it's exciting because you're going to see something that no one else is able to do, because they have a business, they have an image, they have to make revenue selling their stuff. I don't need to do that. And I love doing this. So you're going to have a market analysis given to you, and we will lean on that. And it's macro analysis, as I mentioned, the higher time frame stuff, seasonal tendencies. And then I will do a top-down analysis from monthly all the way down to a 15-minute time frame. So that way you know every time frame what I'm looking at, what I think is salient for that particular day. Nothing is going to be hidden from you. I will have nothing on another chart that you didn't see. Every single time frame, I'll walk you through it. Nothing is hidden from you. Absolutely 100% transparency. You will see and know everything that I observe and see and identify in every time frame. Every key level will be made mention of. That's a traditional market analysis. There's nothing inherently special about that. We all start there. It's useful. And where it's pertinent, I will show you how the retail will see it. The average trader, the hedge fund trader, what they see in price. And I will show you how to use what I teach is technical science, where it frames the narrative. How are the funds? Because that's why this business is what it is. They're not after your stop. They're not after Baby Pips Communities stops. They're not looking at Forex Factories, message boards, community stops. You're just following the same logic that these large funds use. That's just the way it is. So the market seeks that liquidity. And I'm going to teach you how to identify those arm wrestling matches where the fund manager's positions. Wait a minute, Michael, you said fund manager? These people are the billionaires. Yeah, they are. But their trades aren't high accuracy. They're trying to make 15 to 25% a year. What some of you are trying to do in one morning session. They're not trying to do a whole lot. And they can weather being wrong a lot. Because number one, they're using other people's money. They know there's a sucker born every minute. Every time the market goes up, oh man, somebody made money today. I wish I could. Let me put some money in my 401k. Let me go in here and put my money in this fund over here. So there's always a new influx of suckers coming into that. This market is constantly bringing in people, and it's throwing people on their rear end through loss, fear, margin calls. The industry's constantly got a revolving door, but it's never going to run short of new people wanting to come in. Why? Because your jobs suck and they never pay enough. I don't care who you are. I got surgeons in here that make over $700,000 a year, and it ain't enough. Okay, come on. So there's always going to be greed. So this approach to trading is never, ever, ever, ever going to stop working. Because these same mindsets that come in are indoctrinated to do the same stuff that these books talk about. And these arm wrestling matches, when their stop loss, where their premise about where the market's going to go based on a pattern or a moving average pointing some direction or another, when that fallacy is placed as an opposing view to what the actual market's going to do, I'm trying very hard not to use the word that shall not be named. The approach that I employ and how I use price action to predict a future outcome, when there's an arm wrestling match between the retail perspective on what price should do versus what it is that I do, what I've taught you and what I'm teaching you ongoing, those are perfect snapshots of exactly how you are going to want to trade. You're going to be looking for those perfect conditions. They're perfect because you have at that moment the highest probability for the market to go to where real large pools of liquidity are resting. How do you know baby pip stops are wherever they're at in a particular currency? You don't. You can speculate and say, well, it should be here, it should be there. But do you know for certain? No. But you know darn well above a daily high or a 4-hour high or an hourly high, funds have their orders sitting right above that. So the market will absolutely go there. It's going to go there, especially if there's a retail theory suggesting otherwise. So if you were asking me if we were casually meeting at a bar or whatever, which is something I don't frequent, I don't go to a bar, but if we were to meet one evening and say, hey, how's it going? We just got to talking. What do you do for a living? What do you do? Blah, blah, blah. I basically look for weak-handed positions to fall into the lap as an arm wrestling match with smart money. And I capitalize on that. And that's how I would reply. Person listening to that, they're not interested in trading. It suffices. Oh, wow, you sound like you really got it figured out. I don't need to go into a chart. I don't need to show them anything on my phone. It's just, oh, wow. Wow, okay, that makes sense. So you're looking for the dumb money. Exactly. But I try not to say dumb money because it's derogatory. I always use the word street money or retail. But ICT, if you're trading in an account with Thinkorswim, you're trading retail. That would be true. Anyone that's trading in a brokerage firm like that, that would absolutely be true. But I can't trade retail. So I can't submit myself to that. And I'm trying to also cause a paradigm shift in your thought process about what you think you know about the markets and how it really books. And then when you can look at the markets and see these arm wrestling matches between what the retail crowd, everybody learns the same things. Everybody is thinking the same thing. You got two moving averages, they've crossed, they're pointing up. It's going to keep going up. And it's had a small little rally higher. And now it's consolidating, but slightly sloping down. Oh, everybody knows what that is. That's a bull flag. Not if we have just literally traded into a premium PD array and we're in a larger scale sell model. You're looking at a potential smart money reversal. But the retail crowd has no idea about what that is. They're expecting continuation because the moving average is pointing up. I started with moving averages, and it's helpful in the middle of the moves. At the end and at the beginning, they're useless. Absolutely useless. You'll get chopped up and beat up in those points and also when we're in consolidations. And that's part of why I will be doing a traditional technical analysis and market analysis, and then showing you technical science, which is building narrative. And then from that narrative, bias for the day and for the session. How do I do that? How do I arrive at a bias? I might be long-term in a buy model. It means I'm primarily looking for higher prices on a daily chart and weekly chart. But my narrative and bias for the session morning may be bearish. Well, wait a minute. Wouldn't that be low probability? No. No. Because if the conditions are correct, everything I'm looking for at the time that would allow me to come to that conclusion, you will know about them. That way you have real world experience with someone that's been doing it for a long time and behind the curtain view. You've already seen me prove to you daily I can do this. How many times did I call something and it not happen? Show me a MyFX book. No, I will call it live. Count how many times I got it wrong. Did it go exactly where I said it was going to go? That's proof. MyFX books, that can be faked. I cannot fake it in front of 250,000 people. They all see the same thing live. And when you watch me live over a chart, there will be a small delay between me talking and your computer or device receiving what it is I said. But once I say it, I can't edit it. It's going to arrive at your computer or your device eventually. It is what it is. And it won't matter because I'm going to tell you where I believe the market's going to go. You're not going to need a to the second update of that's going on. Because I already will frame out the day. I'll show you what I'm looking for, why it should do this, why it shouldn't do that. And hopefully, this is my goal by doing this, it will disarm you. It'll relax you because you're all coming with this fevered concern that it's all going to stop working. I better start making money with it right now because Mike he's giving it to everybody. They're going to change it. They're going to take my opportunity away because he's being so generous. And I don't want to cuss him out because I want to learn from him too. But this asshole is making it impossible for me if he keeps going on. No, relax. Relax. Trust me. Trust me. It's not going to change. Will you get it wrong sometimes? Absolutely. You will see me get it wrong. And it will be nothing in the grand scheme of the entire year. I want you to see me get it wrong. I absolutely want to see it happen. Because some of you are going to lose your friggin' minds. What? Oh my goodness. And you're going to wrestle with something. Feelings and emotions and concern, anxiety. Your hero got it wrong. And that's going to be good for you. That's a growing pain. And you'll see, it's nothing. It's a paper cut. Just leave it alone. It'll heal. But all this concern that things are going to change and it's going to be made impossible for you to be able to do it because I'm bringing all these other individuals into the mix. It doesn't change it. You have no idea how deep this market is. It's a lot of money in this marketplace. I could have millions of followers and it isn't going to change anything. The market's going to do what the market's going to do, period. So you'll be disarmed this year. You'll see that there's nothing you should have been worrying about. You should have just went through the process like I've told you to do this very way, and you would have learned sooner. But you'll understand by technical science aspect of what it is I do. And the reason I'm saying technical science because the guys over in Goldman Sachs, they made a remark one time. You don't have to complicate this stuff because they see everything I talk about. They see the things I teach, and it's a lot of moving parts. And because, they don't really make any decisions, they just follow a long-term model and hope it moves in their favor with somebody else's money. That idea allows them to be standoffish, snooty, snobberish. Like, hey, we don't need to do that. It's too much effort, too much technical science. It's just trading. It's not technical science. So when I heard that, I was like, you know what? I'm going to take that and run with it. And it really is very similar to what you could call what it is I do and what my students do. It's technical science. See, when you look at an indicator and you're looking at moving averages and you're looking at all the things that everybody else knows about in books. Now, I want you to think about this, okay? This has nothing to do with the word that shall not be named. It's common sense. If everybody knows that if an 18-day moving average crosses over a 40-day moving average, and they're both sloping up, that's called stacking, okay, when they're both pointing in the same direction up, and then an indicator, like a slow stochastics, 14-period slow stochastics smoothed by a 3%. If that is used as your oversold condition, and you see it cross over and start pointing up after being oversold, everybody that's ever read anything about books knows that that would classically be defined as what? That's a buy signal. Okay, everybody knows that. But pray tell, why is it that everybody isn't making millions of dollars with that? Exactly. It's more to it than that. There has to be something to ferret out what? The shit that doesn't work. Because there's so many indicators and so many variables and so many potential theories inside of retail logic. How does the market and how does the participants of that market determine which flavor of the market retail logic they're going to use for that day, for that market, for that time frame, for that session of that day in that time frame. You see how infinitely this is ludicrous. It's madness. And when I took a step back and looked at my own approach to doing this and seeing the results not being supportive at all, I was like, okay, there's a way to do this, but it's not by doing this, applying different things all the time, constantly evolving, thinking I'm evolving into a better version of a retail trader. But in fact, all I was doing was constantly adding more dirt and making the water even harder to see through. But you feel like you're doing something constructive. I'm going to show you the opposite, even with my own content, which is what it's been all the time.